General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, let's knock the workout. So Friday is the 9th. Let's go back here. Monday being the confirmed anchor point. Yep, it's Monday. Expansion did play out after the chop. We flipped this breaker, sat on it, pushed up to this daily EO. I don't believe the tournament was hit on Wednesday after we cleared out. There's liquidity on this side, which we didn't take out. Like we just wicked it, but we never did clean it up. So I feel like Wednesday took care of the actual expansion business. We didn't expand at all to the downside, and we never did take that high. Let's get the delivery. Mm-hmm. I was thinking we would engineer down here to push up for here. Where is this? For Friday. This is the plan going into Friday. I was thinking we would pair orders at Tuesday low because Friday and Tuesday is relative equal. and it engineered liquidity for this low. News came. We took all the internal liquidity from the session. This is consolidation on news daily profile. Let's get the whole week. Mm, let's put it on the bottom. Put it top. Okay, let's put it. Okay, I think I can make this work like this. There's ways to trade that too. And then some reviews. NFP is not that scary no more. Consolidation rate on the profile for NFP. Let's go here. Okay, let's do. It should stay here. Go this way. Mm, what is about this delivery? I mean, could have started with this 11 o'clock open. After all this is done, even here, the delivery became smooth at 11 a.m. No, after 10 a.m. hour candle, price settles. Also, no, 10 a.m. was the supreme core opinion. Pin. There we go. Now we go to the daily. Hmm. see we kind of closing for the first time out of that accumulation high, but we still in this range. It still has a manipulation vibe to me. I'm not really sold on it. Price closed above one daily high. This could be manipulation still. We have to wait and follow through. Any notes for Friday? Not really. Pattern narrative of myself. How to choose better trade locations. This Friday. I should do some detailing. So that's Friday. That's done. Y'all have a good day. Peace. All right. Let's do Saturday. January 10th. Really strong. Let's look at these deliveries. It's Monday. Okay, that's perfect. Tuesday, that's London reversal model. We have another London reversal model here. New European reversal. Okay. So when it's asking which models hit and which were missed, have been most repeatable models so far. London, low of the day, and New York AM reversal profile. Identity, progress, discipline, patience, and confidence. Identity, taking it slow and reduced risk for Q1. I plan to lean into the year too fast this year. Need to time my aggression for Q2, Q3. Case study log. Hold on. To know how price reveals balance ranges. Experience earned this week. Skill sharpened. Lesson locked. Taking time to really examine the trader and the mindset of each trade taken. Next week, improvement focus. Being aware of what we're thinking throughout the day. Through the day. Maintaining a positive mental attitude. When they say your attitude is your altitude, all that cool stuff. So why when I hit this button, you don't care that I hit the button? And the power of three charts. And then next week I'm gonna add the SPY or SPX. It don't make sense to add midweek. Okay. Monday, Tuesday, the work got done. This is interesting. This was the best call out for the Wednesday and the sale on Thursday. That's where most of the textbook delivery came. This sale was hard to get because it wasn't no OLR, but that was just a good call. So anchor here. This didn't grab liquidity. I think this line is just a big line. We never did hit this previous month's high. Believe we got this high. So our liquidity exchange happened here. We got us a nice reversal, which kind of feels like an OTE retracement for the week. Which it is. With the return back to EO, which should have been up here, but you can't say what it should have did on NFP Friday. It's supposed to be choppy and throw you off. set the stage. Tuesday use Monday to push. Wednesday was textbook. And Thursday accomplished. OTE. Hold up. Liquidity exchange. And smart money reversal for OTE retracement for continuation. Any big notes or thoughts? Mm, Tell about how price is delivering. We are in a distortion, waiting on volatility. And I seen like a video where it's like some old people. They was talking about the markets. And they said we just stuck in ranges like this, and we're not going nowhere. That there are no adults in the market because the adults in the market, you know, get it to destinations. I thought that was interesting when you put it, and it kind of makes sense with all the global economic things going on. But money's still getting moved around, so just see where the money's going. Like it's going to gold. And Nvidia look like it's suffering. Like Nvidia should be way up here for the Nasdaq. S&P's doing good because it's not so tech heavy. But that's that on that. Y'all have a good day. Peace.